China is still more than the rest of the world combined. Another problem is that all this happens at lower costs. In solar, production costs in the United States are 6 times what it costs here. And even this table is misleading because the US doesn't even make solar wafers. And Southeast Asian countries produce almost all the wafers and solar cells. So new firms either need to figure out how to build those or buy those inputs from here anyway. New companies that want to take market share from China need to compete with the established players here who already have these low-cost advantages. Then comes the supply chain problem because China has that too. As a bonus, this is where all the smart people are, with 3/4 of the world's patents in the industry now coming out of Chinese labs. Irina Spazapan was at Goldman and now runs money for Systemic in London. China's advances in the renewable space result from their drive for energy independence. So these are all unfixable problems because there's no place to even start. The raw materials that feed these industries are pulled out of the ground by Chinese companies operating across the world. Then they're put on Chinese-run railroads and ships and brought to Chinese refineries and fabs here in mainland China. The entire system is designed to make sure, in this case of clean energy, these red bars stay red. Those are the challenges that confront Western companies trying to break in and the VCs who invest in those Western companies. This here speaks to another problem that we all have when trying to describe the Chinese economic system. It's positively not anything like the socialism or the communism that we learned about growing up. China is not capitalist either, at least not in any way that these venture capitalists are hoping for. The business model that made them rich in New York or London or Berlin, they will not work here at all. Scale comes before profits. The state companies benefit and the consumers benefit, but investors not nearly as much. Beijing is relaxed about hundreds of companies going under because a handful of companies that do survive here dominate the world. Corporate Darwinism is the rule here, and even these successful VCs are shocked by the extent of it. All that leads to a final problem. Companies that compete against Chinese firms are already in trouble. Investors in Chinese companies do not enjoy the outsized rent-seeking returns that Western investors insist on back home. So one option seems to be to partner with Chinese companies. The trouble with that idea is right here. Marvel Tech is a Shanghai company that builds gas turbines that can run on anything. Gong Lin is CEO, and according to him, everything his guys need to build those things is right next door. His suppliers are local, and they do whatever it takes to keep his business. Marvel has the same problem other Chinese companies do. The profits are hard to come by here in mainland China because the competition is so strong, so they're looking for export markets. Same thing at GCL, who builds solar modules. But here again, we see the differences in business models. These companies already have proof of concept. They don't need VC money to fund the research and development because that's already done. Their products are already in the market, generating cash flow. That cash flow gets reinvested to produce at scale and not distributed to private investors in dividends or capital gains or investment banking fees. And that's the same model that built the champions like BYD and CATL. These companies are vertically integrated in ways that no Western company is anymore. They own the entire research, production, and marketing stacks. Jacob Bro is also out of Berlin. He spent a few minutes watching a production line at CATL and says nobody is going to catch them. We did a report on Northvolt earlier, a European battery producer that collapsed, and Bro here wonders if Northvolt might still be around if they had Chinese partners to help them. These venture capitalists represent billions of dollars of capital, and what is left unsaid is what this all means for the business model of venture capital itself. A VC fund that invests in clean energy needs projects to invest in, or they have to close the fund and do something else. After a few days in China, they realize they need to do something else. They just don't know what. This is Milo City in Hunan. Be good.